Good afternoon, Jim Howe. It is June 12th, 2021. We are a day late, but that happens sometimes.
Hey, what's up?
What's going on?
Yeah, well, I was really busy, going crazy yesterday, and so I'm still glad that we're here
Yep,
to do it today.
glad we found some time this week before the
Yeah,
weekend,
yeah.
before market opens again on Monday.
Yeah. I love Mondays. I love the excitement of what is going to happen. I try to always watch the pre-markets, but it's never quite. You never know what the pre-market's going to do. It
Yeah,
might be
it's not
down.
quite 1-to-1.
I know, right? It could be going down. It could be going down the night before. I can look at it and go, oh, gee, we're down like 20. And I wake up to my surprise, it's up 80. It's like, what? What happened while I was sleeping? I
Yeah,
don't
like
know, but I'm
what
happy.
if you had to guess, like what would lead to those kind of swings overnight?
Well, obviously, the Chinese markets and the European markets are
Uh-huh.
trading while I'm asleep.
Right.
And while they're out, they're buying and selling stuff, and a lot of that stuff they're buying and selling is the stuff we trade. So anything can happen. So it's kind of like a circle sometimes. U.S. market good, Chinese market good, European market good, U.S. market good again. And then sometimes it's we're good, China is sucky sucky, and Europe can't make up their mind. And then here we go, and we start off with a nowhere day because it's kind of in this jam where no one knows what's up. Anyway,
So
that's
it's
kind
almost
of
like a market game of telephone.
it's kind of like I don't know. I think it's a little bit like musical chairs.
Yeah, fair enough. All right, so let's go and start us off. As usual, we'll probably start off with QQQs this week,
Well,
unless
I
there's something
decided.
else you're looking at.
Well, no, I decided to first of all
Uh-huh.
kind
What'd you
of
say?
bring us back to some of the basics again,
Okay.
because trading indexes is always about the index, and trading indexes, you know, what's good for all. It's all like the fangs, right? Fangs float all boat. When fangs go up, it's kind of like the ocean rising, and a lot of the other tech companies follow suit just because. But to get to the crux of it, what you're looking at right now is the Dow Jones. This is basically the Dow everything index,
Right.
and as you can see in this last from the 24th, or down in here, this is kind of the bottom, that we are trending up again. But the big trend, as I always like to say, is my friend. And you can see with my moving averages, which I should always remind you, that one's 10 and this one is 15. So this is kind of an aggressive moving average I'll use sometimes, but you can see that the averages are saying the Dow is good, the trend is saying the Dow is good, and even though someone might have bought here a little bit, it's still good because you had that trend working for you, and it's just a matter of waiting it out. And as always, though, I always look for these bottom uh, thresholds that I concern myself with, right?
Right.
So, and when people trade, sometimes, unfortunately, you don't know that this is going to happen
Yeah. That is not a great day to be holding that stock. You're gonna have some
until it
doubts.
happens, right? So anyway, that's the Dow. So we can look at that and go, that's okay, that's looking good.
Okay.
And then we can spin down and look at the NASDAQ composite.
Okay.
And you can see, again, it's looking good. You can see some overboughts and some oversolds in the bigger trend.
Yeah.
But, it's switched gears on us toward the end of May there and started kind of making a nice little run. So that's kind of the overview, I guess, of the
Hmm.
two indices that I like to follow. I don't know if there's other people out there following the Russell, for instance.
Yeah.
Where's the Russell? But you can see I have a lot of indexes here. I can find Russell. It's the rut. I know what it is. I'll just do it. Rut. The Russell's always been an intriguing index to me. I don't really trade much in it or things that represent it because the Russell's always, it's got a lot of companies in it. And
1,000 of them.
yeah, exactly. But the upside is a little broader measure, right, of the market because it has so many, and they're smaller cap stocks generally. Anyway, so we can move on to our what we normally do, right? We look at the TQQs. So
don't forget to tune in next week for our explanation of technical analysis.
Yeah, that's a whole story unto itself, and there's as many ways. I think the key for anybody who's trying to trade the market and use technical analysis, there's as many technical ways to look at it as you can imagine. I am a strong believer in keep it simple, come up with something that looks like it works, and stick with a program. But keep it.
You trade with rules.
I trade with rules.
You got a system.
And everybody needs to develop one that they feel is good for themselves. But I'm happy to share the ones I use. So we already know the gym rules about trend lines, trend channels. 1 year, 2 year, 5 year, and 6 months, and then the rest of it is simple moving averages are always nice because they are clearly understandable about what's going on, and they work. But you can't. Sometimes people look at these and go, "Oh, see, this is obvious. I'll buy right here, and then I'm going to go way up here." But the problem is, you buy here, right? You buy here on a moving average, and you're buying in at maybe all the way up here at 101, right? And you're doing really good until it breaks down right here. And then what are you selling at? I don't know, 99. So
here's my pro tip: don't buy things to sell them in the next couple days. Generally speaking,
my pro tip is never buy any if you're trading, not investing. If you're trading, never buy anything unless you already have a predetermined exit. You know where you're getting out. I also, we'll talk about it in a minute, but anyway, these are the TQQs. And I don't know what the shot calls were, by the way, but you can clearly see we had a nice little, I think we're going to revisit the high at 112 is what I think, but we're 109 on the week.
It's a good week. Let me actually see while we're here, we'll see how we did. 102 to 107 was yours. So yeah, we're actually doing better than anticipated.
Yeah. And how about you?
Mine was 105.5 plus or minus 3, so mine would cap out at 108.5. So the top of mine is still a little lower than where we're looking at for the actual close this week.
But that gives you the win on the projection.
I am closer. Yes, I am closer.
Yeah. So why do I think it's going to revisit the high? Well, because we had a lot of selling in here for a lot of different reasons. If you listen to a lot of news, you'll hear a lot of the money managers talking about the FANGs, about growth being a place of safe harbor and a place still with some growth opportunity, and that they think that on their end at least that the growth is going to step back into the limelight again.
Let me pick your brain for a second here, because this is something that's kind of gotten me. So when we're talking about FANGs or pretty much any hyped stock, I'll include Tesla here, where they're trading at a very large multiple of their annual earnings. How do they say that there's room for growth in this stock? At what number they're like, okay, well that's too much. How do we, if you're talking about it from an analysis standpoint, how do you figure out at what point you're like, okay, the growth doesn't justify this level of overbought?
So first of all, you're talking about investing versus trading. So technical analysis, at least in my world, and remember, that we are crazy people that should never be listened to or followed or used as trading advice. So, but in technical analysis, I don't really actually care about anything to do with what the company's price earnings ratios are or growth ratios. I mean, those things are already built into the soup for me.
Mm-hmm.
And using technical analysis, I only actually care what the market thinks about it, not what the actual facts may or may not be. If you were going to use fundamental analysis for your investing, and there's nothing wrong with that,
so for you, it's almost solely an emotional play. Like, how does the market feel about something is where your analysis mostly starts and stops.
Right. So, I mean, as the example, the best way for me to explain that would be in my not caring about what's going on here, is that if you take a look at this back down in here, I look at this little candle, right? And you can see it opened right there at 108.32. It went all the way up down to 107 on its tail, but from its open, it closed at its high for the day, right? So there's a story there. I look down, I try to see, well, what's our volume look like? Is anything extraordinary going on? Well, no, not really. Volume's a little less than average across the board. So I can glean from this that there are buyers that came in here. This previous bar stoked the interest of the buyers.
Right. They're saying, okay, we're going up now.
Yeah, and then the follow-on was, can we go a little higher? So we'll open here at our previous close and let's see where we go. And we ended up a little higher. So that's why
we closed at the high for the day too.
Yeah. So that tells me there's pent-up buying pressure, theoretically. I also can see that the 14-day true range of trading is down at a pretty low level for this stock, about $3.86, which is kind of low sometimes for the TQQs, but that's what I'm looking at. So when I'm looking at technical analysis, I don't really care what the PE ratio of any underlying company happens to be. And even if I'm trading an actual stock, an individual stock, again, same scenario. I only care what the market's up to and what the chart is telling me the market's up to. Now, let me go back to your first original question, which is, back. So this is a mathematics game, right? And there are no actual rules. So it's kind of like 2 + 2 can equal 5, or maybe 2 + 2 = 3, because there's no
just what everyone agrees on.
Well, I don't know if it's what they agree on. It's just that there is no absolute fundamental model that is mathematically consistent all the time.
Right.
So let's take PE ratios. If I buy a company with a PE ratio of 6, I'm going to make 12% return as long as they maintain their sales and maintain their earnings. That'll be my yield, right?
Yeah.
So, but what happens if this company is a growth company and their sales double, or projected to double, right? And their earnings double with it? Well, now my PE ratio is 24, right? So now I'm going to make, well, actually, I can go to 24, to get to the same yield. So I can go to 24. Well, so when you multiply the growth rate into the formula to come up with what I call blue sky, the market investors, people who literally do that kind of math are trying to calculate the forward value. So if I already owned it at a PE multiple of 6 and it doubles in sales, I'll own it at a PE multiple of 3 instead, right?
Mm-hmm.
And I'll be making 24% a year.
So good.
So there's a lot of mathematics that go into equity growth companies. Some people look and buy things based on sales to growth, sales to earnings, growth to earnings, growth rate, earnings rates. And so, by the way, there's a great program that can explain a lot of that kind of information to people. And I think this company used to give away a free kit you could take a look at called VectorVest, and they're really good at explaining more fundamental types of investing. But you must separate investing from trading. They're not the same things.
Gotcha. Very good in-depth analysis of it.
Oh, sure. I don't even know if I understood what I just said. Oh, well.
I caught at least half of it. Let's put it that way.
Anyway, so
there's our tech stocks.
Yep, there's your tech for the triple leveraged TQQs. Does that? Do you think everybody knows what FANG stocks are, by the way?
I would hope so at this point, but for those who aren't aware, would you like to give us kind of the short and sweet version?
Yeah, FANG. Whenever they talk about FANG, it's basically Facebook, Apple, Netflix, and Google.
Yeah, I was gonna say I think that the second A is Alphabet.
No,
it's got 2 A's.
Yeah, but it's Apple.
I know Apple's one of them.
Oh yeah, and Alphabet. Yeah, true that.
Oh, Amazon. Duh. Yeah. Facebook, Amazon, Apple, Netflix, Google.
Yeah. Gotta spell it right. I spelled it wrong. Sorry. All right. So back to our next one is FAST, right?
Yes, sir. Our financial markets.
Yeah. This one kind of went the other way. There's a lot of probable reasons. We didn't really go outside of the box, my trade box.
Uh-huh.
So I'm still in on this, and I'm not. This is a stock I don't concern myself at all until we're down to around 112.
Uh-huh.
And the trends are all still intact.
So the thing, I mean, when I'm looking at this, I'm thinking, okay, now might be a decent time to buy. Like, especially with that last day, the candlestick there on Friday. Like that looks good to me. I like that we had like a deep red day, and then opened higher than that, and then closed at the high for the day. Like that to me feels like we're headed upward. Like there's a realization of oversold, and it's going to start having a reversal.
The thing about trading the FAST index, or the FAST ETF, triple leverage. One of the things to keep in mind about financials, though, is they do have a separate set of rules that have to be recognized that have less variables in them than the QQQ, TQQ index, or the TQQ ETF and the QQQ index. So there are more rules because banks have book values. They have there's a lot of things that go on in the bank. So for instance, one of the bad news stories that was out here,
mm-hmm.
and I don't know if it actually got built into here, is the banks are facing some difficulties loaning money. And not that they can't find people to loan the money to, it's that they just have too much money and they can't loan it all, right?
What a problem to have.
Yeah, well, it is, because what do? Let's say you're Microsoft's banker or Amazon's banker, and you have $1.5 billion of their dollars sitting in your bank account, or maybe you have $3 billion because you have several of those companies banking with you, right? Well,
right.
If you can't loan the money, you still have all the costs associated with managing that money inside of your bank, and you
Right.
don't get any return because
Yeah,
you
and
can't
any
loan it
interest
all.
you might owe on that.
Right. So you're out there, as a bank with all this money that you're accounting for that you can't loan and make any yield on. So
Right.
where's that? What happens to that? It comes out of their margins. It shows up on the balance sheet.
Yeah.
So you can see that you can get some softness in these financials, like based on what's going on, inflation and things, problems like having more money than you can loan become problems. And in the future, um, when some of these moratoriums come off, depending on where they're at, some of these mortgage company or mortgage houses might
Hmm.
end up with some more repossessions than they expect, and that can also kind of hurt that bottom line when those companies aren't getting their interest payments.
Right. I'm really curious how much of a thing that's going to be. I don't
Well,
know. I don't know what the effect is going to be yet, but I'm thinking that that's going to come into play in the next probably 6 months or so. I don't know. I think that they realized that the housing crisis was a problem, and so the idea of kicking people out of houses is very politically unpopular right now. So I think there's the political will to just sustain this almost indefinitely to keep people from being evicted, you know.
I went out here a little ways just to show that the lofty levels that you may think that we're at are really
I'll say that they're,
not
if anything, further back than we would have expected based on
not as
pre-COVID.
lofty. Yeah, because there's your COVID drop right
Yeah.
here. And so if you went all the way back, the full 2 years that I've got shown here, we're essentially in a long trend line. We're basically sideways. But when you extend the mean average, of what this should have been had there been no COVID, I mean, you're talking about a line that probably would have um, looked like
And we'd be up in
kind of
like
like
the 140s to like 180s probably.
it looked more like this, right? You'd have to find yourself a spot. So I think right about there, you think the market, because you have to have some oversell, you got to have some overbought, and then when you stretch that out over that 2 year window, 118, it's probably about fair market based on on the past growth rate, right? And
Yeah.
the past, and if you go out 5 years and look at it that way, you can see um, you can, because you have to somehow account for the COVID impact. And
Yeah.
you also probably need to account for the fact um, that there will still be a remaining impact at some point with COVID that's going to take a while to slush itself out. So there you go. When you stretch this thing out along a mean average, we're probably about fair market value
Okay.
for me. Um, and we'll see where it goes from here. So from here on, it's all question marks in my world. So I'll keep a tight eye on this and uh, keep my risk at a minimum. So one of the things also too, just FYI,
Hmm.
trading, and this is why I always say, no, you got to know your exit. You're trying to always set yourself up for success, right? Um, but you have to have a risk management rule in place.
Right. You need
It's
to know
more
when you're
important.
getting out.
Yeah, it's more important to protect what you have than it is to worry about what you make, at
Right.
least for me.
Yeah.
So, what was the shot call, by the way?
Our shot call for fast.
Yeah.
Yeah. So yours was 122 to 130, and I was 122 to 127.
Well, I guess we both
I was
either
gonna say we're
both
both out on
lost.
this one
How
by the same
about
margin too, because we both had 122 as our
yeah,
low for the week.
yeah.
Thursday caught me by surprise. Let's put it that way.
However, my trade box was right.
Yeah,
That
yeah.
was the
And you
that
can
was the
see like it
box
it
that I traded
kissed
with.
the bottom of it and then stopped.
Yeah.
Cool. Do you want to move
Yeah.
on to UDAL?
Oh, sure.
We're definitely going on like kind of a slower meandering pace this week. I like it. It's more of the original show style.
Yeah. Well, I like random questions. I mean, you asked me about Bitcoin the other day, which I thought was intriguing because everyone was talking the buzz about was it Ecuador?
Oh yeah, yeah.
Yeah.
They've adopted it as an official currency.
Yeah. uh, anyway,
You
um,
were saying something about them withdrawing from an anti-corruption agreement, and I hadn't seen anything about that. So what were you talking about?
well, it was in the initial reports of them talking about going to Bitcoin. There was a reference made to some anti-corruption agreements that were in force, for the United States to keep supplying, them certain types of aid, right? U.S. wants to
Hmm.
know where its money goes when it's supplying assistance to a country that uh, has a less than stellar uh, record, I guess, of
Hmm.
corruption. So I believe there was an anti-corruption agreement, and while the U.S. is not, I think I read, and I can be corrected by any number of people out there who might have read and know more about this, but I thought I understood it to say that we were still going to be sending money to Ecuador, but it was going to go through private, more of a, I shouldn't say private, a more trusted outlets, like Red Cross or
Gotcha.
other
Go-
ways of
Going
distributing
through
aid
NGOs.
where the government is not in play. So, and because the economy is so like, who cares?
Hmm.
Um, I when I read it and I seen what was going on, I had some of my Bitcoin and Ethereum friends saying CC, and I'm like, oh yeah, yeah, we will see, not CC, we will see. That's what you need to say, because it doesn't matter. The country's too tiny, and they might change their mind. I mean, after all, Elon changed his mind, so we'll see.
We'll see.
But I mean, it's a
It's a
drop in the.
great test run. We can all keep an eye on it.
Well, I don't. I was thinking that. You know what made me? I was thinking about Bitcoin again today, and
I feel like you think about Bitcoin a lot.
well, no, I was. Well, I'm still trying to understand it. Uh,
Hmm.
the storehouses of wealth are easy. They're easy to understand. But I really wasn't thinking about Bitcoin. Well, I was. I was thinking about how, um, you know, the underpinned asset. What's the underpinned asset that gives the value any kind of storehouse worth, right?
Hmm.
And then I was thinking about inflation and deflation actually in my head, even though I don't think we have to worry about that. And I was pondering it because a lot of people are like, why doesn't how I don't understand why the inflation numbers affect equities that much.
Uh-huh.
And so all these things started dwelling in my head. It's like, okay, Bitcoin's big sell is there can probably ever be so many Bitcoins in existence
Yeah,
forever, right?
there can only ever be whatever the max number was. I don't
Right,
know it
right.
offhand, but there will never be more than that many Bitcoin.
So that infers a currency that never changes. All right. So all other forms
In
of
theory,
currencies,
inflation proof. Yes, that's one of the
yeah,
core
exactly.
arguments for Bitcoin.
Right. But and it's a great example to use because in currencies, I was thinking about value and the storehouse. Back to the storehouse question. It's like, well, okay, uh, if I have a house worth $100,000 and everything's in Bitcoin, is it gonna be worth $100,000 forever? Because there's no inflation and there's no deflation. And then the question of value came in. It's like, well, in our world, inflation is part of the driver, along with demand, in the cost of housing.
Right.
But with a house, if I buy a house for $100,000, or let's say 1 Bitcoin,
Uh-huh.
I have a house. In the end,
Right.
I have a house. So, and if the currency deflates, I still have a house. Or if it inflates, I still have a house.
Right. I was
So
gonna
it
say
just
if it deflates, yeah, you still have the house, but the currency is worth more.
yeah, so it just come to bear to remind everybody that inflation doesn't affect the value of the thing. Inflation is or deflation is only the value of the money, not the thing. And that's why stocks go down when equity stocks go down when there's inflation, because they built something for 90 cents and they sold it to me for $1, but then there's 5% inflation, so
Right,
they're
but the
10,
dollar
10
is worth less than the 90 cents that was used
yeah,
to be.
so the 10-cent profit they made is now a nickel. So
Yep.
I can't afford to give them as much for their stock because they're not making as much real actual money. They're
Yeah.
making the money, but it's not real money.
Right.
And that's why
It's the invisible tax.
yeah, exactly. And who benefits the most from inflation?
As you said before, the government.
That's correct. The government, the issuer of the money and the bonds and the loans. So anyway, there you go.
I'll give you $9 tomorrow for $10 today.
Thank you. You're welcome, and I'm happy to take it.
See, Jim, I realized we're in the wrong business. We should be printing money.
Yes, printing it is way better. I don't know why I drew this box up here. It was some strange reasoning.
I think you were talking about where we were seeing the resistance line last week.
Yeah. Well, you can see we have a new support line right about here. So in this box land, that's kind of where we're floating
It's funny. We
on the
kind of
Dow.
talked about something similar last week where we saw the rising the rising channel of red candles,
Right,
and
right.
kind of a
That's
similar
right.
deal where
Yeah,
our low for every day, the last 3 days at least, has been increasing, but
yeah,
we're getting red candles because we're starting higher every day.
yeah. So
Like our
did you, what was the calls on this last week?
so the calls for last week on UDOW, you were 73 to 77, and I was 75 to 77. I think we were both 73. What is the actual final number there? I can't read it.
7309.
That is for sure you then, because that was your bottom was 73, so that's you.
Hey, winner.
Chicken dinner indeed. Yes.
Yeah, totally. The reason I remember why I left this box in place, I left this
Hmm.
long box in place because this is kind of a zone. I don't want to see if it comes back and dips back into this zone again. Um, then I have a new resistance level up here and a new support level down here. So it tells me, on this one, if I physically owned any of it, I'll have a stop on this at 72.48, using my ATRs as that stop number. And I probably would have got stopped out right here. And I think, though, interestingly, I would have been stopped out and probably regretful, because
Hmm.
I still think that the upper box is really the new trading range for this stock, at least for the near term.
I think I can agree with that. So we're kind of at the point now where we start talking shot calls anyway. So do you want to make some shot calls for next week?
Well, UDOW, well, you can see my shot call. It's
Yeah.
70.
Well, I
It's
know, but
70. I can probably bring my my top number down because I think that there's hold on here. Let me get this back where I want it. I grabbed the wrong thing here. All right. I think this is what we're talking about for a new narrow trade range. So if I want to be a little bit more precise, then yeah, I'm going to call it from roughly 73 to 75.
okay. So kind of rehashing last week's. I'll hold 75 to 77 then actually. I think that's where I'm going to be.
So you're going to go up here somewhere. Wow.
Yeah, no, I think it's crazy, but nah. you've got 73 to 75. We'll make it clear. I'm just gonna say I'm on the bullish side of that.
Yeah, well, the Dow's been doing pretty well. In fact, I was going to show you. Are we done with the shot calls, or are we still more?
Well, we didn't really do them for fast or QQQ yet.
Oh, yeah. Well, let's do them.
Officially.
So fast, I'm going to drag this back down because this is how I like to roll. I'm going to put it right about there, and then I'm going to drag this over to the end of next week, and that's my call. 115.
It's on the high side of your probability cone there. Just gonna say.
I know, but you know what? You got to make certain allowances. I mean, if these were absolute, I mean, so in my system, I have layers of priority that I give to certain indicators. Channel gets a heavily weighted 1. That's heavily weighted for me.
Yep.
And if I was going to run the channel line, I'd say, I might say it would dip to 113. It could dip below and become oversold, but if it doesn't, 113 would be where I'd start. And I don't really like being in the upper pieces of the channel.
Yeah.
Because it takes a bunch of these overbought conditions to pull these channels up, and so you can find yourself kind of in the wrong spot. I like trading the lower half of these channels if I can. So anyway, that's why I put that there, and that's what I think will be realistic. If
okay, what are the numbers on that?
115 to 126.
All right. Okay. So as I said, I'm seeing that we kind of got this bottom here. We got a bull hammer right after this drop. So I think we're gonna probably open next week at like 118. I don't know. I'm thinking somewhere in that range, and then probably close out 124. So a little bit narrower than yours.
All right. Are you inside both of my numbers?
Yeah, I am.
Yeah, you're doing the Price is Right thing again.
No, see, that's worse because then I've got a $2 window on top and a $3 window on bottom. I've got a much narrower range than you.
Yeah, but I only win if it's lower or higher.
Right. Well, you don't ask me to go first. So
all right, well, there's that. What's the other one we're doing?
TQQQ.
So this one's.
All right. Well, don't say anything. I'm not peeking. Give me a second. I'm just gonna get my numbers out of the way. There's our 5-day. There's our 1 month. There's our 6 month. Okay. That would put me at 1. I wish what I was looking at had a better scale. 108 to 112. Based on absolutely nothing.
I like it. Absolutely nothing.
We are not financial professionals. This is not financial advice. Consult with your financial advisor to see if you're wealthy enough for Romberg.
I don't even know if I'm wealthy enough for Romberg.
Right.
Anyway, actually, I need to go take some antacid after listening to myself. I'll take it after I re-listen to what I said. Which would be like, oh man, what the hell did I say that for? That is crazy. Yeah, so I'm going to be 105 to 112.
105 to 112. Okay, so you're a little more bearish, but similar. We got the same top.
Well, I see resistance. I mean, this is going to be resistance right there, 112.23.
Yeah, and that's where we both stopped. But you're saying that the 105 to 108 range is reasonable for next week.
Yeah, that's what I'm thinking.
Cool. All right. Well, that completes our shot calls. Unless you want to do one for like the couple we talked about at the beginning. Was it Estow or something?
I don't really follow those, but I was going to tell you that I do randomly follow. I mean, I know that what I say every week is I trade indexes because they're the safest thing to do. But if you're somebody that wants to, how should I put this? So I also believe in setting a portfolio up for success, right?
Mm-hmm.
So the indexes are kind of a risk management trading methodology,
Yeah.
and but that doesn't mean that I don't wander off and look for an opportunity to um, um, to make some money on an individual stock. I don't advocate it because they can eat your lunch, right? So if you decide you're going to do that, you need to have a really strong reason along with some really strict rules.
Mm-hmm.
And this is one that I actually trade, um, but I'm kind of in a much longer haul. This is XPeng, XPEV, and this stock is a Chinese electric car company. And
Okay.
there's a lot of them out there. However, this particular one
You like this one.
I like, but only for one reason, dominantly. First of all, I like the Chinese market in general over the long haul. Their
Mm-hmm.
economy, they're the second largest in the world. They have consumers up the cadoodles, and they like homegrown products too. So even if we don't ever see this car company mass produced in the USA, it doesn't mean they're not going to make a lot of money.
Let's say like they're the predominant, consumer of them. So yeah.
Right. So we also have
Pretty.
a lot of other conditions. I'm not going to go into it now because it's going to be too long and arduous.
Yeah.
But the bottom line here is this: um, electric cars are not the largest percentage of auto sales in the world.
Mm-hmm.
However, their growth rate and opportunity and commitment in general is probably pretty enormous. Hence the reason Tesla gets an infinite PE ratio. You'll
Right.
never ever get your money back, kind of deal. So, um, and by the way, a great way to look at PEs is off this, just off a little tiny bit. But think of a PE like if the PE is 12 and all things are equal and they're earning money, 12 years is how long it's going to take you to get your money back before you hit
Right.
break even. Just a FYI, it's an easy way to look at PE ratios. That's how long it's going to take to get my money back.
Yeah.
So, in this case, though, this stock is an electric car company. Unlike NIO is an assembler. This
Mm-hmm.
particular company is built more on the Tesla platform. They have their own technology. They have their own software.
Have their own
So
manufacturing.
like Tesla, they're more of a technology company. Well, I'll put it this way: they're as much a technology company as they are an auto company. So that's why I like them. I'm not advocating I'm going to go buy this, but
Well, see,
I've
I
been
think that's the
trading.
interesting thing. Like Tesla, I think part of their play is that they're really kind of a lifestyle company. Like
Yeah,
they have a whole social aspect.
right. So I also have another little theory that I play with sometimes. This
Uh-huh.
stock was discovered kind of back in here, and it hasn't been on the ADR market.
Discovered.
Uh, well, it hasn't been on the USADR market for quite a while. So what happens is, and I can show you this on a host of them, especially SPACs.
Mm-hmm.
So this whole circle, this whole area right here is what I would call that's the exuberance. There's nothing in here except I want some
Yeah.
and
Yeah.
us will buy it. It's just utter exuberance because it just came out. We want to get in early. We're going to pay any price to get there. I think even Snow, which is a cloud company, did the same kind of little action.
Really.
But so there is the exuberance, and then people start selling their way out of it because they're going to lose money if they don't finally get out some number here somewhere.
Mm-hmm.
And then it kind of settles down, and you can see it settle down in here again, where it probably should have been to begin with, right?
Right.
And this little window now, I'm calling it's now starting to be priced based on actual information.
Mm-hmm.
So even though I trade the technical, I still want to know if there's something fundamental about the company that's happening that will drive these technicals forward along with the growth of the company, which will keep increasing its price earnings multiples as it grows. So this is frantic buying for fear of being left out.
Mm-hmm.
Then there's the selling for fear of losing all the money you spent up here. And now we're in the next phase, which is the market probably has fully addressed the value of the company and the worth. And you can do that with pretty much any company you want, and look at it. In fact, what's the other one?
While you're looking for that reminds me of something I'd seen a while ago about like technology phases, where you have like the hype phase where it's like, this is the future, it's insane, it's incredible, and there's this huge surge of interest, and if there's a company associated with it, surge in stock price. And then, like you said, there's the realization phase and the, I don't know what it's called, but like the heart fallen phase where like, oh man, like there's huge limitations. It's not, the greatest thing since sliced bread. It can't solve all the world's problems, etc. And then after that, you enter like the phase where it's actually entering the market. It's already proving itself, and the prices are still low. And then it starts to climb back out of that. You're not in the early adopter phase anymore. You're in widespread market adoption, and that's when it kind of hits its stride and ultimately ends up well above those prices that you saw in exuberance. But it's years later.
Right. In fact, I think there's another theory they use. I think there's, like I said, as many theories as, don't pay attention to that chart, by the way. There is as many theories as there are people, but the one I liked is called it's the S theory. Mm-hmm. Where it comes out, it rises in exuberance, falls to where it probably needed to, and then starts to swing back up again and formulate a baseline and head back north, heading back to it's kind of a backwards S actually. So. Oh no, it's a forward S. I guess
what it is a sideways S.
I need to get a lesson in alphabet.
I'm sure Google has plenty of classes.
Probably. So, is there any other thing that you're? I remember now what I was thinking about. So this is a SPAC, right?
Mm-hmm.
There's a SPAC.
A special purpose acquisition company for anyone that hasn't been following all of them the last year or so.
So again, same scenario. This is a Virgin Galactic SPAC. Virgin
Galactic.
Yes, but it's not Virgin. It's not. I shouldn't say it's Virgin Galactic. It's a Virgin SPAC. This SPAC is going to merge shortly with 23andMe.
Okay.
That's what this is going to be. But here it is. We offered the SPAC, and then hurry, buy. We all want to be a part of it. And then we go back and do exactly what we did before. It's just now starting to build its baseline. The SPAC is due to merge shortly into ME, I think this month sometime, ME. And from there, the company will start to become valued, and then whatever its growth options or opportunities appear to be will start finding their way into the marketplace.
Right.
So, and you can see that because of the recent news of the SPAC, of the merger approval and finalization, you see the big jump in interest all of a sudden down here. So, I mean, these aren't for the faint of heart because, I mean, of course, we're talking about something that's $10, right? Or $11. So I guess if you're a gambler and don't mind the gamble, there you go. My brother is really excellent at these kinds of trades.
Does he time them properly?
My brother, and he's got a great strategy. Buy some of these He always seems to find them near their bottoms, and as soon as he captured his original investment, he sells it and just keeps whatever the remaining stocks are.
Smart.
And then he can just keep adding and adding and adding. And this is RSVA, which is a battery company. There's a lot of battery companies out there, but you can see same scenario. It's a little bit not quite as horrible, but you can see the spike. Somebody paid $28 that day.
Yep.
Right?
And they thought it was worth it.
And one of these days it's going to get back to 28. I don't know when, maybe in 4, 5, or 6 months. But you can see the same scenario, exuberance, decline, and now a build coming right there. So
it's actually built on some level of reality.
Yeah, as soon as all the exuberance is out. So what is the lesson here? Don't buy into a SPAC right off the bat. Not unless you buy it back here on the very first
I was
day.
going to say, buy it day one, sell it as soon as it gets popular.
Exactly.
As soon as you see news articles for it, sell that day, sell right then.
Yeah. And the last thing I'll share before we go, and I know we're probably way over time here, but
we're at almost an hour now.
This was the other company I was telling you about, VectorVest. They'll send you a book. They'll tell you the math. They'll show you how PEs work. They'll show you how growth multiples work in valuation.
Once again, not sponsored, but if they'd like to sponsor us, we're open.
I like the software. I like this right here. This is called their Color Guard. They have a composite that has a considerable number of stocks, and I mean thousands and thousands, a little bit like the Russell, maybe more than the Russell in terms of the number of stocks held. I can't say for sure. But and then they give you the gross advanced decline line. You can see that they're saying, look, it's a good time to buy reasonably priced stocks, if you can figure out what that means. They're telling you that the advanced decline line, the pressure is on buying, not really on selling. And if you look up through here, they'll tell you that these are relative timing, which means that these companies are seeing some accelerated action, or these industry groups. Mm-hmm. So you can see that retail, it has been making a move. Petroleum's been making a move, which we already know. Energy coal. And some of these energy sector ETFs. So a lot of this is ETFs and retail, mm-hmm. Retail and energy. Sorry, right. are popular at the moment in the industry sectors, and then some, so it kind of gives you a nice. There's a lot of other stuff in here you can use, but I wanted to show this because this screen kind of gives you the big picture. And this screen is telling you right now, coming into the week at least, that everything's looking good.
We have green lights. All systems are go. I cannot wait for them to say on Monday morning, right before market opens, the Delta strain of COVID-19 is immune to vaccines and the world is going back on shutdown.
Yeah, there you go. Yeah, we're not doing that anymore. I'm pretty sure the world has decided they can't afford any further crazy.
As my wife and I joke, it's fine, I'll just die.
Yeah, that's easier. All right, well, that's all I got, there's the Russell when I was looking for it.
There you go.
What does that look like?
It looks like COVID right in the middle.
Yeah, it looks a little bit like FAS.
Well, I know they actually have a pretty strong connection. I am not the person to ask this question about, but my understanding was that Russell is financials, in the same way that FAS is.
Yeah. Well, yeah. Well, no, I can't say that. That's everybody's homework. They'll figure out what these indexes are being representative of.
I dread the day that someone actually fact checks us. It's going to be terrible.
I gotta say, I do this because I just like talking to you. That's
mm-hmm.
why I do it.
Yeah, no, it's fun just to chat about, honestly.
Right. I mean, I live this thing. I sleep it and dream it. All right. Well, I'll call it a day. How about you?
I think that sounds good to me. I don't think I have anything particularly in addition to add to what we've already discussed. At least not for this week. Like I said, next week I think it'll be fun to talk more about like technical analysis and reading candles and some of your like stock trading strategy. That'll be some fun stuff to tackle for next week. But I think 1 hour in, we can call it a show for today.
All right.